Well-founded technical analysis continues to cut through the noise. What did I see today? Find out. As you can see by the heat map, most stocks today were red. This is the Dow Jones. Let me show you the Russell 2000. A lot of red in the Russell 2000. And also let's look at the S&P 500. A lot of red here as well. Up here, this watch list has all of the symbols I'm holding a long position in, and as you can see, almost everything was red, with the exception of American Eagle Outfitters, and I will get into that. First and foremost, I want to do a little rundown over these 4 charts that I have pulled up currently, and then I want to dive into AMC. You can see the S&P 500, it started on a pretty high note, the SPY I should say, but the price did fall throughout the day, and then now is closing along this bottom trend line of this rising wedge. And it is posed to make a bearish breakout. And that bearish breakout could lead to the breakout of a larger pattern. And the price target I have for the S&P or for the SPY is $404. American Eagle Outfitters here, you can see, did have a good day today. It also rose, but fell dramatically. However, it held onto a lot of the gains and made a second consecutive close above the top trend line of this falling wedge. The bullish breakout continues. However, volume was very low. I'm still waiting for a strong volume signal here to cue a move much higher. Now, this higher high from this last point here does make this trend here valid, and the strict trend line would be down here, okay? But I like to use internal trend lines, and that internal trend line is saying that the price could fall a little bit before bouncing, and if it can support the price one more time, if we can get one more good day, this is a confirmed breakout on American Eagle Outfitters, and my price targets for this stock are a bit higher, up towards the $27 range, and then higher at $29. So I'm waiting for this bullish breakout to play out. Genprix had a really interesting day today. You can see that this has been a great week for Genprix. Green day, green day, green day, green day, but you can see that although these are green days, the range is being very tight, and I'm happy to see that the body of these candles are starting to rise, but today we got this weird looking doji. That is interesting, and it's not technically a doji because the price isn't exactly at what it was when it opened, when it closed, but it is very, very close. I do anticipate to see the price come down and touch this trend line for support, but I think that there may even be a further dip. And I'm going to zoom in and I'll explain this really quickly. So here we go. Why do I think that? Well, I think that this trend line here is going to produce a downward breakout, and the height of that breakout may bring the price down to about $2. Maybe I'll go into that later. Now, okay, AMC, you can see this big red downtrend, and I've been saying it over and over. I'm not bullish on AMC until we can get above that trend line. Let's go ahead and expand this cell and have a look at what AMC did today. Zooming in to the 1 minute. You can see the price rose and interacted with this line. This is a huge downtrend. If you haven't seen this before, I'm just going to zoom out and I'll show you on the 1 day. This is the primary downtrend. When I say prevailing trend, this is what I've been talking about, is this nasty trend. You can see it starts way back here in late November, and the price has encountered it a couple of times in the past before here, only to fail and ultimately be sent lower into a vertical run down, and then finding consolidation. This yellow line represents an internal trend line, and if the price starts to drop dramatically, I expect the price to reach this level. You can see that today, the price did move up and then pulled back down below it and closed below that trend line. That's a rejection. You can see the price did bounce and tried to continue to rally, but failed. Tried to find support and blew through there, and the price just starts to fall lower and lower in a very controlled descent. This could still be bullish, it really could be, but to see the price close below that line is not great. There is something of a channel here. You see, if I start connecting these touch points, you can see this channel forming, right? Well, here's our first touch point, 2, 3, 4, and 5. There is an upward channel here. It's very gradual, but I caution against being overly optimistic towards this because that same channel looks like a big bear flag to me. Huge bear flag, right? You can see how big this is. If you go all the way up there, that'd be the bear flag. I'm just gonna go ahead and delete that internal trend line. It kind of deteriorates that view. But you can see that this would be a huge flag. And maybe I don't include the full height of that big dip. Maybe I, whoa. maybe I take this last minor high up here preceding this and say maybe that's our big bear flag. I mean, that would be very bearish, and it's actually a pretty big pattern. I don't think it technically qualifies as a flag due to its length of time. Nonetheless, I do expect to see a bearish breakout in the future. There are still some bullish chart patterns though. Let me pull up the default, my daily chart patterns, and we can talk about what I'm talking about. So there is a double bottom here, right? An Adam bottom and an Eve bottom. And I was talking about how the price needs to close above the intermediate high within the pattern in order to confirm is valid. And that did happen yesterday. However, yesterday I cautioned in putting too much faith in this breakout. And I said, I'm gonna need a second consecutive day above this intermediate high in order to really feel secure in this double bottom. And sure enough, the price rose, rejected at the bottom of the descending triangle that was formed above, and was sent lower back into the range of this ascending triangle that I charted yesterday. This looks like a false breakout and a pullback, and as you can see, the volume was pretty high. Technically a green day because of how far the price gapped down prior to opening, but ultimately this looks nasty bearish. Looks nasty bearish, and I expect the price to continue to fall until it reaches this trend line support here. Now this double bottom doesn't bust, it doesn't become invalid until the price closes below the lowest low, which is way back here. And that would be, below 1340. So the price has a long way to go before it breaks this pattern. And if you watched my video yesterday, I described how I expected the price to rise and encounter resistance right here at $21. And sure enough, right on the money, resistance, and the price was sent lower. At this point, I expect more consolidation to occur, and that may occur above the pattern, it may occur within this pattern. I'm not entirely sure, but there is still the possibility for consolidation here and then a bullish breakout. I do need to see it though in order to believe it. The RSI ultimately coming down as the price made a lower high. Yes, a green day, but actually a red day. You can see the volume here indicating that. This is not looking very bullish at the moment. I am neutral still on AMC because this technical pattern needs to play out first. The price is at a critical junction. Is this just another corrective phase in a massive measured move down, or are we seeing the price consolidate before an explosive move out of a double bottom? No one really has that answer yet. The RSI is right in the middle of the bullish and the bearish zones, or I should say, when the price is caught between 45 and 55, my observation has been that AMC is typically preparing for a big move. You can't really know which way it's going to go, but typically I've seen it consolidate in the 45 to 55 on other time frames and then break out. And this volume trend is increasing. It's tempting to want to feel bullish about this, but I'm still going to be neutral until I get a really solid move above that trend line I showed previously. So overall, I don't know. AMC moves with the markets, and I think that the broader markets have a lot of hurt coming. And I say that because of the bearish formations I see playing out on the SPY. Now let's go have a look at that really quick. I know that AMC doesn't trade on an index fund tied to the S&P 500, but there seems to be a correlation here. And this is just a good representation of what the whole markets did, There's a big fat wick on a lot of different stocks just like this. And you can see that there is this uptrend here that has been broken. And I said yesterday, until the SPY can close above this green internal trend line, I'm not going to feel bullish. And sure enough, the price just tanked. And you can see now we're even falling below a different uptrend. I think this is looking very bearish. Let me go ahead and open up a different chart. My ascending broadening wedge. There it is. And you can see as the price fails to reach above this medial line that this is starting to form a double top, a partial rise double top, an incredibly bearish Q. If the price falls below the low of this candle, 443, I'm expecting big downside, down to 404. And that would be nuts because obviously the index has been a lot higher. The index is red on the year. And well, let's just see how far back that would take us. Let's go 2 years here. Yeah. Going back down to 404 would wipe out all the gains until about, April of last year. I'm talking about the S&P 500 giving back all the returns it's made from that point in time, which is pretty severe. It really is. You can see that the COVID pandemic drop down here was towards 326. I don't think we're going to reach that low, not yet. At least I don't have a target for it. But I do think that there is a bear market coming, and this is what I'm talking about. This is exactly what I'm talking about. I expect there to be a big drop to give back a whole year's worth of gains. I see 1, I see 2, and just like with AMC, I said it before, I'm looking for 3. A very simple 1, 2, 3, A, B, and C correction here in the SPY. If that happens, AMC is going to get roasted with a ton of other stocks as well. Now, not everything is going to go red, and today we even saw that American Eagle totally betrayed that trend. It did suffer a big tall wick, as you can see, but the price did manage to actually pose a pretty bullish close. Let me open up my daily chart drawings, and you'll see it is above that falling wedge. Beautiful. I love it. That looks great. Let's go ahead and zoom in on that and see what it looked like. Yeah, there was definitely some support and resistance here at this $24 level. What was that? $24.30, and the price did fail to rise above there, and it is seeming to make a nice 1, 2, and 3 move down as well. But it is still above the uptrend and the falling wedge, the top of the falling wedge. I am still bullish here, and I think I even see a nice little uptrend through here. Yeah, that looks nice. Little intraday uptrend. And I think it's going to be important to be looking for these stocks that outperform or are performing better than their counterparts. And not counterparts, but you know, American Eagle Outfitters and AMC both trade within the Russell 2000 grouping, and they trade on the IWM as well. And so what I've been noticing is American Eagle Outfitters is not suffering the same declines as AMC is. You can see here's the IWM today. Whew, that looks bad, right? Let's go ahead and turn on the 1 day. And you'll see I have this in a rising wedge pattern, or maybe it's a bear flag. We had a nice 1, 2, and 3 ABC measured move down, and now we have another consolidation pattern, and it's looking mighty bearish, mighty bearish. And it was also a red day, so American Eagle Outfitter is doing better than AMC and the IWM, and I expect that trend to continue, and that's why I'm long on American Eagle Outfitters. It is doing well. I think the price is well stocked, the stock is well priced, and that their earnings are going to be excellent. I want to zoom in on Genprix too. Let's just go ahead have a peek over there. Like I was saying, you know, this candle looks a little scary, so I want to go ahead and zoom in on that and have a look. I mean, yeah, it's keeling over. It's totally keeling over, and I think we're going to see a downtrend ensue. Let's talk about why that is. Okay, let's turn on the blank chart too. I want to work with something fresh. Now, we do have, let's see here, a new high up over here. I'm going to zoom in on the area so I can get a better look. Okay, here we go. So, I'm going to take the lowest low, and I'm going to go to the highest high. And then I'm not going to overwrite the price at all. And what that means is between those 2 points, the lowest low and the highest high, I don't want this trend line to intersect or cut through any of those candles. And this is how you draw a trend line per Polkowski. And we have it right there. And as you can see, today the price closed below that level, which is bearish, So let's start talking about price targets. How do you calculate the price target from a trend line? What Polkowski does is he takes the highest high, or the furthest high from the trend line. He measures the distance to the trend line itself, and then he applies that price to the breakout. And what do we get? We get about $2. And as you can see, there is horizontal congestion here. There is going to be support and resistance right here. So moving forward, I do see Genprix in the near future falling down to $2, and I would consider that a buying opportunity for myself. It is pretty speculative to be buying into Genprix because they are a pharmaceutical research company, but I think over the long term that a company like this will succeed, and this just technically looks really good still. Even having a downtrend in the medium to near term doesn't dissuade me at all. This downtrend is broken right here, and that's the biggest thing for me, is to see that downtrend broken. And you can see here on the daily chart, this downtrend hasn't yet broken. We have to zoom into a smaller time frame to see that. So there is an opportunity here for Genprix to bounce and move higher without consolidating down. And the RSI is in a pretty good spot. So I think overall, I'm pretty happy with Genprix. I'm going to continue to hold Genprix, even if it does drop down to $2. I'm just going to buy more. So that covers a couple of things. What else do I want to talk about? I want to talk about gold. Okay, I don't typically talk about gold, but I'm going to start buying gold. I actually am using the SPDR symbol GLD to buy gold, because it's easier than buying and holding metal. So that's just what I'm doing. I know there's gonna be a lot of, if you don't hold it, you don't own it people, but you know what, that's okay. I'm plenty satisfied with holding GLD. You can see that this is a weekly chart, and for the last few years we have this massive ascending triangle forming. I have the touch points shown here. Now the approximate breakout timeline is shown here in yellow, and there's a good chance that we're going to see a positive breakout in gold within the next few months. On a technical basis, inflation has been really high, so why isn't the price of gold going up? Well, the price of gold is notoriously manipulated, and that's not even a conspiracy theory. Just Google it. There's a ton of big prime brokers manipulating the price of gold with futures. It's a fact. You can just look it up. They're paying fees and fines left and right, but you know, that's the cost of doing business when you're that big, right? Nonetheless, I digress. Here we go. So my bullish target for this breakout is plus $266. And as you can see, the price is currently around $1,800. So I'm talking about $2,000 an ounce gold. And that'd be really good. And I think moving into the future, this is going to be very attractive because in the bear market, I feel it's coming in the equities markets. I think that some of these other commodities might perform well. Even if rates go up, I don't expect gold to perform poorly. I think that there's going to be a lot more demand for these sorts of securities that are just tried, true, solid, reliable. You can always count on gold. That's the mentality that exists around this commodity. As you can see, the last high did break above this last high, which is really good. What year was this? 2011. So I started getting into precious metals in 2008 back here. And if I had held all of those things that I had purchased then, I'd be way up, right? I mean, it wouldn't be like stock market money up, but it would be a safe return on my investment, right? So at this point, I'm really hoping to see actually a breakout of equal magnitude here. I really want to see a measured move up from that point. And if that happens, holy cow, you know, that's upwards of $2,800 an ounce. That sounds good to me. You can see the RSI is looking pretty good. It's just in this nasty consolidation zone, right? So it's hard to know what's going to go on. Let's zoom in on the daily and get an idea of what's going on there. I mean, that looks good to me. I like that. That's making me feel things. What do I see? Well, I'm going to if you take this low and just start connecting lows, you can see the price is generally consolidating, right? That's what that is. That's consolidation. And that consolidation is above a support and resistance level at 1788. I would expect to see the price to break out higher. And this positive breakout would, of course, would create a larger breakout on that weekly time frame as well. And I would love to see it. I'd love to see it. So that's what I have on GLD. What else do I want to talk about today? Let's go ahead and look at GameStop really quick. What did GameStop do? Now, GameStop's about a day ahead in AMC in that it has this primary downtrend, right? Which started right on my Fibonacci timeline, which is crazy. If you haven't seen that, I mean, yeah, the technical analysis continues to be an incredibly reliable way to forecast when trend changes happen. It's not necessarily going to predict which way the price will go or how far, but it's going to give a really good indication as to what's next. Way better than just hyping and hoping. Nonetheless, I digress. Here we go. So the price did break down a little bit towards the end of the day, but as you can see, it closed above that trend line. In terms of GameStop versus AMC stock prices, I think GameStop has the upper hand on AMC. That's all there is to it. Volume was pretty good today too. The RSI is starting to keel over because it was a lower high, that is true, but this looks a lot healthier. You see that the body of this candle is above that trend line. That's good. I like to see it. How about Sundial, really quick? What did we do today? We recently broke a trend here, this yellow line, this is a downtrend. And yeah, big wick on the day, like so many other things, but ultimately still above that trend line. This is good, I like to see it. Let's just go through the whole list. What did I miss? GameStop, AUR, I think is the last one, Aurora. This is a very speculative buy. This is a company that's researching autonomous vehicles. And not bad. Not bad at all. I mean, big wick, yeah, but still above this horizontal congestion region. The RSI is starting to keel down. Volume is low. It could go lower. This is a long-term hold for me. Just a long-term hold. I don't have a whole big position here. It's just, I'm waiting for this company to start selling stuff. Yeah, this is nice. The uptrend hasn't been broken yet. Not much to say here. So that's what I have for today. A lot going on, and overall, I think that in the future, I'm going to be accumulating more shares just buying and holding. I think we're about to have a big sale on equities in general in the broader stock market. I'm going to start going for safer securities. I'm always buying savings bonds through the treasury. I'm going to start buying shares of GLD. And I might even go pick up a few new coins as well, silver coins. I have a great time with collecting silver coins. So that's where I'm at. Happy trading.